It's Tuesday, the 8th of June 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. 4 listed companies, including National Australia Bank and the big casinos, are warned about anti-money laundering in their businesses. That's our main story. Also coming up in today's podcast, Australia's AAA rating confirmed and making it cheaper to borrow money. Job ad surge to be 40% higher than a year ago. And global app Pinterest to become a shopping site. Immediately after the podcast, stay listening for my chat to Daniel Hines, ANZ strategist, about the amazing run of commodities. But first, here's a brief look at markets. US markets were mixed overnight ahead of inflation figures due for release on Thursday. In early afternoon trading, the S&P 500 was off 0.3%, the Dow Jones Industrial Average was 0.5% lower, and the Nasdaq was up 0.2%. The big mover on Wall Street was Biogen Inc. Its share price jumped more than 50% after it received approval for its controversial Alzheimer's disease therapy from the Food and Drug Administration. It's the first approval for an Alzheimer therapy since 2003 and a major breakthrough for the 35 million people and their families with the disease. European markets were generally higher, with London's FTSE closing up 0.1% and the Stoxx Europe 600 finishing 0.2% higher. The S&P ASX 200 was down slightly yesterday, closing 0.2% lower at 7,282 points. It did hit a new intraday high in the morning session, climbing to 7,309 points before dropping back. Travel companies were among the worst performers, with corporate travel management, Webjet and Flight Centre all down around 5%. A couple of the beleaguered software groups, Nui and Appen, had much better days, up 6%. Oil prices were down a touch overnight off their recent highs. Gold prices rebounded and are trading just below $1,900 an ounce, and the Aussie dollar is worth 77.6 US cents. Financial intelligence regulator AUSTRAC has warned 4 listed companies, National Australia Bank and the casinos, Crown Resorts, Star Entertainment and Sky City Entertainment, that it's concerned about money laundering through their operations. Some of these allegations date back more than 6 years, the regulator said, but the warning triggered a sell-off in the share prices of the groups. AUSTRAC wrote to National Australia Bank saying it had serious concerns about its compliance with the law. It was alarmed about customer identification procedures and ongoing customer due diligence. NAB had identified compliance issues 4 years ago and will get most attention given the massive fines some of its competitors have paid out. AUSTRAC said it was not considering civil proceedings at this point against the bank, but the warning was enough to trigger a sell-off in NAB's share price of more than 3%. Both Commonwealth Bank and Westpac paid heavy fines over anti-money laundering breaches. Westpac's was the largest of the lot at $1.3 billion. NAB boss Ross McEwen conceded the bank's processes needed improvement, notwithstanding it's already invested more than $800 million into its control and processes. The regulator also wrote to the New Zealand-based Sky City, which is listed on the ASX, about potential non-compliance with anti-money laundering and counter-terrorism laws, and its share price fell more than 6%. Similar concerns about Crown's Perth Casino and Star Entertainment's Sydney Casino led to 1.5% and 2% drops respectively. In Crown's case, it conceded it illegally transferred more than $160 million for international guests from the Melbourne Crown Towers hotel cards for use on gambling. The transactions occurred between 2012 and 2016. AUSTRAC has questioned how the casinos handle due diligence on some wealthy Chinese gamblers, and the gaming giants face hundreds of millions of dollars in fines. It's a shame the allegations have taken so long to surface. No doubt AUSTRAC is busy, but both banks and casinos have attempted to pick up their game recently. Not that there's ever any reason to allow money laundering, though it's not always that easy to catch. In a moment, the rest of the news you need to know this morning. In overseas news, India has announced free vaccinations for all people above the age of 18. The country, which has been the hardest hit by COVID-19 in recent months, has already doled out 230 million jabs, but only 3% of the population is fully vaccinated. The country is still recording 100,000 new cases and more than 2,000 deaths each day. The big airlines in Britain and the United States have issued a joint request for the resumption of travel between the two countries. saying economic recoveries in both economies were being held back. The US-UK route is the most lucrative in the world, and the airlines, including Delta, United, American Airlines, JetBlue, British Airways and Virgin Atlantic, said leisure and business trips could restart without undermining efforts to combat COVID-19. A report from British bank Standard Chartered said that 80% of multinational companies will start culling suppliers who aren't moving quickly enough to prepare for a low-carbon economy. The report was based on a survey of 400 companies, and 15% are already cutting suppliers who aren't green enough. Many global companies, including Apple, Royal Dutch Shell and Unilever, have committed to reaching net zero emissions. And the global semiconductor chip shortage will last well into next year, according to one of the world's largest manufacturers, meaning cars and consumer technology products will be delayed. Singapore-based Flex said there could be chip shortages, in fact, into 2023. Locally, the federal government and major banks will be able to borrow relatively cheaply in international credit markets after S&P Global Ratings revised the government's AAA rating to stable, removing it from a potential downgrade list. S&P welcomed Australia's strong economic rebound and said it was more confident that the government's fiscal deficit will narrow towards 3% of gross domestic product during the next 2 to 3 years. It's currently about 10%. Australia was put on a negative outlook in April last year, with the ratings agency worried about the country going into too much debt to fund the COVID recovery. A AAA rating allows the government and major banks to access money at lower interest rates. Job ads jumped by nearly 8% in May and were close to 40% higher than before the pandemic, according to the ANZ Job Ads Survey. The data adds to the growing weight of evidence that the employment market, which pleasantly surprised authorities even throughout the pandemic, was stronger than forecast. There's now been official Bureau of Statistics vacancy data, National Australia Bank business sentiment figures, and the ANZ survey, all demonstrating strength in the labour market. ANZ said it expects the unemployment rate to fall to 4.4% by the end of next year. It's currently at 5.6%. Theoretically, Australia and China are at loggerheads over trade, but sometimes it doesn't feel like it. Customs data shows that the value of trade between Australia and China jumped 33% for the 5 months to May, compared to a year earlier. Australian exports were up 33%, in large part thanks to the value of iron ore sales, and imports jumped 31%. In state news, West Australian Premier Mark McGowan will mandate the vaccination of aged care workers against the coronavirus. He'll be the first state or territory leader to do so. Across the country, there have now been 5 million vaccine jabs administered. In Victoria, there were 11 new community-transmitted cases yesterday, all linked to known carriers. Melbourne's lockdown is due to finish on Thursday, and yesterday Prime Minister Scott Morrison called on the state government to end it as soon as possible. But media reports this morning suggest a full easing of restrictions won't occur until after the upcoming long weekend. Meanwhile, New South Wales launched its intergenerational report yesterday and said to pursue its stamp duty reforms, which would abolish large payments every time someone bought a house, it needed federal government support. The report said the state will need to build 1.7 million homes over the next 40 years, and replacing stamp duty with an annual land tax would reduce the time taken to save for a house to 8 years from 10 years. The report also warned that the push away from coal globally could cause production of the commodity to cease in New South Wales within 20 years. In short, the big buyers of New South Wales coal, Japan, South Korea and China, are all moving to net zero emissions by 2050. Crown Resorts hid from the Victorian Royal Commission that it may have short-changed the state government up to $200 million by claiming perks it gave to punters from its poker machine loyalty program as losses to reduce its tax bill. According to the Financial Review, the Royal Commission has heard that since 2014, Crown classified parts of its pokies loyalty program, such as accommodation, free parking and food, as losses. Clearly, they're not. The Australian newspaper is reporting that at least 7 Australian companies were among dozens of companies infected with the ransomware that last week crippled meat processor JBS. The slaughterhouse was forced to shut down operations and stand down employees because of the cyber hack, tipped to be state-sponsored. Altium has rejected a $38.50 a share bid from Autodesk, with its board saying while it appreciated the interest, the proposal undervalued Altium's prospects. The $5 billion bid was more than 40% above the group's closing price on Friday. The software company's share price jumped 39% yesterday to $37.83. It is now back to where it was late last year, ahead of 2 profit downgrades. NBN Co is considering dropping its widely criticised variable capacity charges, where prices rise and fall with usage, and replacing it with a flatter model using a base rate. The government-owned fibre optic group has proposed 2 pricing structures after years of complaints from internet service providers. The changes were notified in a discussion paper released yesterday that's part of the process for making pricing changes to the NBN, which will, of course, eventually affect us all. A report in the Financial Review today said private equity group TPG was set to appoint an investment bank to consider options for its Australian pets and vets business, Greencross. That may include selling a stake to a new investor. TPG bought the business for $970 million in February 2019, and it's expected to be worth much more now. The Sydney Morning Herald and Age newspapers and 60 Minutes program have reported that organised crime figures have infiltrated Qantas, and nearly 150 staff have links to criminals and used their positions to act illegally, including importing drugs. Qantas yesterday said it had written to 4 criminal intelligence agencies to find out more information about the reports. Email Payments, the ASX-listed group hit by concerns about anti-money laundering in its Irish subsidiary, said it was still cooperating with the Central Bank of Ireland, and there wasn't a time frame for when the central bank will finalise its investigation. Email's share price is down 30% since the inquiry was announced. The board of Hansen Technologies has recommended a bid from private equity group BGH Capital to acquire the software company. The group's share price jumped 23% yesterday. And styling app Pinterest will launch new shopping features in Australia following the boom in social commerce during the COVID-19 pandemic. Australia will be filled with so-called shoppable pins, which are saved searches that provide an opportunity for pinners, as they're called, to buy direct. Now, for any person out there with a partner who is a pinner, this is bad, bad news. For the Pinterest clan, of course, off you go. In today's daily interview, we're looking at the extraordinary movements right across the commodities market. My guest today is Daniel Hines, Senior Commodities Analyst at ANZ, who has a real knack for explaining the story behind the changes in price. Oil, gold, iron ore, coal and copper are all up in recent weeks, and Daniel explains what's happening with each one and what it tells us about the state of the economy. Don't miss it. Up next in the Fear and Greed playlist. It's Tuesday, the 8th of June, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.